I don't know if you know this or not, but I am now a greenie. I am now an environmentalist. You know why?
Really?
Because I heard of offset carbon credits market, courtesy of our good friend Robert Kiyosaki. And now I understand why so many people are like suddenly becoming environmentally aware and they want to invest in green projects. Yes, because of the market that's developing in offset carbon credits right now that everyone in the world has to play by.
Yeah.
Do you think you're going to, is that lucrative? Is that a good future?
I'm sure it is. Mm-hmm. It's just not a game that I play because to me, you're angel investing. And I don't like to do that. Where's the cash flow? I like to, another kind of saying I have that may be helpful to the viewers is I always want to buy $1 for 50 cents. I never want to buy $1 for $3 hoping it goes to $5. So when you're dealing with carbon credits and whatnot, what's the market? Is it cheap? I don't know. I can't price it.
And who are you going to sell it to? Berkshire Hathaway?
It's I'm sure there's, for people who are experts in that, I'm sure there's a massive opportunity. That's just not the type of game I play. I like to look at a business that's got strong cash flows and wait for panic to buy that $1 worth of cash flow for 50 cents.
That's what and that's the panic side of that is actually the primary element of that market is because what happens is you buy those credits in the beginning of the year and nobody needs them and you're sitting on top of them until tax season comes back around and then you theoretically sell those offset carbon credits to companies who are like, it's more expensive for them to actually initiate these environmental things than it is to just simply go buy credits on the open market that you now have a hold of. And so like right around October, November, right before, it flips over, the year flips over, now you sell them at a profit. That's the idea.
Yeah, let me give you an example, a specific example for your viewers, just based on what has happened in the last couple of days. Altria. So the cigarette maker, okay, they just got nailed because some governing board banned those Juul.
Yeah, Juul's been officially banned, exactly.
Yeah, so Altria takes a massive hit, okay? I don't know if it's down 10, 15%, which is big for that stock because it doesn't move much. Well, this is panic in the market. So what the market's not realizing is that you've got India, you've got China, you've got the emerging markets that over the long term, as people go from very, very poor into the middle class, they consume more things that are unhealthy. They consume more sugar. They consume more alcohol.
Red meat.
They smoke more cigarettes.
Maybe not in India, though. Red meat.
So sure, you might have the decrease in demand for Juul, but long term, you've got a lot of tailwind there. But even if demand stays the same, so what? Because of this price drop, because of the panic, now all of a sudden the dividend yield goes up to almost 9%. It's like 8.2, 8.3. So you can buy, which by the way, you're buying a company that historically has almost always increased their dividend. That is one of the safest dividends you can get. So that's an example of buying $1 for 50 cents based on some short-term panic and putting that in that 80% of your portfolio that's going to pay you to own it.
So if you like that clip, click right here to watch another, or if you want to watch the entire Saucecast, click right here.